All right. Well, hello everyone. How are we all feeling? Welcome to QuantData Q&A. Looks like it's a small group today. This is good. I like this. the smaller groups are always better, right? Because then it allows us to be a little bit more intimate. Allows us to ask questions that actually get answered, and the chat doesn't go like, oh, it doesn't go crazy with 5-10 messages every second. I at that point I just don't even bother keeping up with it. But yeah, let me bring some people on stage just because make it a fun time here. Hello, Rekius. Hello, Josh Trades Futures. There you go. What's up, my friend? Is my audio cut out? Can you guys hear me? You guys can hear me, right?
Nope, can't hear you.
You can't? Oh, unbelievable. Okay, give me 1 second. Let me try to do this again. I was talking this whole time. Okay, let me try again. Test. Can we hear me now?
Now we can hear you.
Oh my goodness, I was talking to myself. I was saying all these good things, all these kind words. And yeah, I was wondering why no one was responding to me. Unbelievable. Good to see you here, Josh, my good friend. We've missed you for sure. You're back in the markets full time now, or actively?
Yeah, halftime, splitting it with work, but yeah, I'm back in it.
There you go, man. All right. Well, QuantData Q&A, right? This is going to be a good session, I think. We're going to talk about, here are the things we're going to talk about today. We're going to talk about, not this. Give me 1 second. Where's my notes? Where be my notes? We're going to go over today, recap the levels of today. We're going to recap why last week was so bullish, why I believe CPI was going to be good, why I believed PPI was even going to be good, and why I still believe Friday is going to be a good day going into the week. We're going to talk about how whales are happy to sit in drawdown. That's something a lot of retail traders don't yet understand. And then we're going to talk about the Delta buyback that happened today. And we're going to talk about the target of 59.60 today. And so, without further ado, we're going to get started because it's already 5:07, and I want to leave some time for a Q&A for you guys. This is going to be a really great session because it's smaller. I only noticed 21 of you guys here. Everyone else must be asleep or they got destroyed during CPI. That's going to be good because then our chat isn't like going crazy with 5 to 10 different messages going crazy, and I don't even bother keeping up at that point. I'll be honest, sometimes when there's like 80 people asking questions, I'm just like, yeah, we're just going to pick the easy ones. We're going to pick the easy ones. Oh, man. Interesting. Oh, yeah, one day someone's got to teach me how to make the camera work on OBS and work on Discord at the same time. But
OBS virtual camera.
Oh, is that the thing?
That's the thing, yes.
Dude, unbelievable. This is all I needed. I just needed you to tell me that. It doesn't work.
You just have to set it up as a virtual camera, and then I think your camera in Discord, you would select your OBS virtual camera instead of your actual physical camera. And then whatever you're sharing in OBS via your physical camera will also be shown in Discord.
That's
I believe
work.
that's how it works.
What? We're going to figure that out next time. So that's a lot of work. Josh, I wish you told me this earlier. I don't know why you didn't.
Yeah, I was hiding it from you, bro.
Unbelievable. Okay, so let's go over news real quick. Like, what else do we have for the rest of the week? Now we know what's happening on the 20th. What is happening on the 20th? It is Trump, Big Papi Trump taking center stage. And then we have two more things happening. We have jobless claims. That's tomorrow pre-market. I'll probably put on another position overnight, London, and then just let it run. So that's going to be really important. We have some Fed speakers, one guy here. And then we have two bill auctions, but these ones aren't over 1 year, so they shouldn't matter. And then Friday is not a digestion Friday because it's OPEX. Right? We talked about this on Sunday. It's only a digestion Friday if there's no news and no OPEX. So this is going to be a very interesting day. But I suspect, so we're going to go over why I have this bullish bias here. I suspect we're going to go upwards, right? And not only that, we have Trump on the 20th, right? So I think most people are going to be risk off until then. Until he takes office. And then next week, even though it's a shorter week, there should be some interest to see long deltas return to the market, right? Who's bullish, who's bearish? Let me see. Oh, hey, thanks, Mark. Thanks for popping in, dude. Run a big poll here. Let's see who is bullish. Who is bullish and who is bearish? Bull. Bear. Type it in right here. I'm definitely bullish. Now, don't say bullish just because I'm bullish, because I could be wrong. Okay, but I have some idea as to why I might be. But again, I could be wrong. ABJ has been wrong before, and he's lost boatloads of money. And he's had to consider finding a part-time job. No, okay. Tell me how to make up my mind. Oh, man. So I'll leave this chat here on the corner. Let's see. What in the world? You guys are crazy. So, today's trade day. Today's trade day was really interesting. And so this is my SPX chart. Right? I actually should stretch this like all the way here. 58, 59, 18. Just about. Okay? So this is what we have. Right? What was the one... I'd say this is like the one trade that was actually a good trade because it followed all of my rules. All of my rules were met on this trade. My terms of engagement, you know, we were to sound super cool and all that. We talked about how last week we had just a bunch of calls, like $14 billion worth of calls, right? Now we talked about this here, so I'll show you here. So we go into last week, the 6th. You guys see this so far? Right? Right here in the middle here. Let me maximize this bad boy a little bit. Does it get messed up? Oh, it gets way too crazy if I maximize, so I won't maximize it. So this is where the bullish bias started. Okay? And we know this week was OPEX, and we knew this week was going to be crazy. Right, so you guys can see right here. Look how many calls have flowed in, and then if we zoom in as well, right? So that's the 6th. Okay, this is the 7th. 14 billion. You guys see this? Right. With our understanding, whales don't throw money away for no reason. Right. It looked like someone was buying the dip, and even though we dipped more, we know that the market makers and the big whales are happy to sit in drawdown for long periods of time before they actually come out in the green, right? We bring it back to that QQQ whale. Who remembers the QQQ whale of last year, right? We saw that QQQ whale have put on a $200 million singular order on puts, right? And then he sat in like 35% of drawdown until the yen carry trade, which made his trade go almost over 175%, almost 200% when they got rid of it. Right, so this is not even that bad of a drawdown. We're seeing on SPX the weight should be much heavier, the premium should be heavier, because it's SPX, right? Billions of dollars are the ones being transacted here, not just hundreds of millions. That's gonna be left for like Qs and SPY. So we saw 14 billion, and then we saw even more. Like going into Wednesday, it was a little less, but it was still more, right? The tilt was still upwards, right? Calls were still being transacted way more than puts. Okay. And so after CPI, after this week, you know, what did we see? The week was starting to go like this, right? We can draw a line here, a vertical line to showcase the start of this week, right? After all this drawn out, right? Now, what was the kind of date that was all that $14 billion came in from, right? It generally came at the close, right? From what we saw. Nonetheless, close or not, like that level was very important to me. So I mentioned this in the stream. 59.18. This was an audible level on my brokerage to let me know that this was a level that may see support because all these whales have bought, right? All these whales have started buying, accumulating calls from here, and this was the biggest day. The 8th was the biggest day. The 7th actually was the biggest day of when whales started buying. 8th was just a little bit of nonsense. And so this level, I was very interested in this one. So this is why I marked this, and then this is why we sold. That was the best trade we had today, when we sold the put credit spreads at 58.85. 58.85, 58.80. Expired worthless today, clearly, right? But not only did that help us on our trade today, it was this. It was a lot of the deltas, right? So this is how we opened. You know, a little bit of wish-washy. If you skip it all the way to 7:30, which is our opportune time for 0 days, right? It was actually still bullish. It was just kind of messing us up a little bit. And then from all the way into... It's just OPEX shenanigans, but you can see right here, 59.70, not looking too hot. This was a little hard to read, but we did see 0 DTE calls kind of flow in further than... 0 DT puts flow in more than calls. You can see that right here, right? As calls are being sold off, puts are being purchased still. At some point they converge, but then right here it actually made a big split. So this is London close, right? So when we talk about the market sessions, we're always talking about these 3 sessions, right? So we have the first 7:30. This is the beginning of your opportune time to enter 0 DTEs based on volatility, based on theta decay. And then we have London close. This is your other opportunity, potentially. So you can kind of see that it pivoted almost like right here. These are times in the market where we want to potentially take trades. And then we have last session. So that's the start of the session, and then this is the last session right here. Start of the last session. 11. Right. The power of using the data today is understanding it. So let me go back. Let me go to like 8:30. 8. Let me see here. There you go. Look at that short delta. We noticed this, right? Actually, it was actually way shorter than this. I was over 2 billion at one point. I want to show this. Yeah, 2 billion of short deltas here. Let me bring this to New York City lunch. Right, so this data is dynamic. And every time we zoom into the market, we can kind of see what the market might want to do. So we saw this 9:30, and this short delta was the clue to get into a little bit of the short. Aside from that drift, we can see here that, let me clear this bad boy up, that around this time, this 59.50 started to started to peak. You guys see that? It's green right now. So what this indicates is short calls and puts. Short calls and long puts, potentially right here. So they're trying to push the market down and not go above 59.50. But when we saw this at negative 2 billion at 9, that was the bottom, right? So that's what we thought. Okay, potentially this is probably not going to do a whole lot more. And this is also the time when we saw it right here, right? When we talk about our put credit spread that we sold today, when I check, let me check my brokerage real quick. $8.37. So we entered it here right here, 8.37. 8.37 was where we entered. So let me draw a little something here. Let me actually put an apple right there. Oh my, that's a big apple. Hold on. So right here, 8.37 is where we entered the trade to sell puts. marking this level here, 59.18. It should be 59.19, but it should be 59.18. And we sold 58.85. So we sold like right here. When we're looking at the market here at this time, where's the interest? Right, it's at odds, right? When we're looking at the data here, we have gamma pointing upwards. We had Vanna pointing upwards too. Right, because calls did eclipse right here. So this was a battle. Whoever decided to do this was doing something that the rest of the market didn't agree with. So it's just this one singular negative. And the moment we started to see this contract, right? So this is what we call, this is one of the setups that I talk about in trading with data. Delta contraction, right? So clearly this is short calls and long puts, right? That's how you get short deltas. Look what happens in the next like 10, 20 minutes. Right, so it's starting to contract already. Bam. Right, so from 2.2 billion all the way down to 1.5, that's a lot that they've purchased back, right? And this is 10 a.m. now, right here. And the more they buy this back, the more we can conclude that the market's probably going to come back up and hit this 59.60, right? 59.60 was the MVC. At one point it was 59.70, but with how much time was left in the market, we were kind of gauging like, okay, yeah, this is probably not a good time to continue holding longs. 59.60 might be all it wants, right? So 59.60, and what did the price do? What was the top of price today? 59.60.61. Right, look how accurate we can be with gamma exposure, right, and understanding delta buyback. So this is again one of the trade scenarios that we like. So let's zoom even further. Eventually, you can actually see this 59.50. Look at that. You guys see that? It's now 700 million, and then a little bit further after, it's gone. The whale who was short here completely gave up on their position. And that led, where does that premium go after they buy back? When they buy their premiums back, it has to go somewhere. Right? And so after that, it was clear as day that, yeah, we weren't going to go, no one was short anymore, right? We never, in my opinion, Delta is a great clue, but I still choose not to short or go against the gamma. If gamma's bullish, which it remained bullish this entire time. That was also another clue that this might be a fake. The most valuable contracts were still ahead of us. At no point in time did bearish gamma become MVC, right? And we saw that today. And so 59.60 was the target. Again, you can see exactly what happened there. So that's kind of the recap of the day. We took a few trades today. If I were to, I went back in my journal already. So we took the MES long in the morning. Didn't work out that well because we started to catch this dip right here. Right, that was a loss. We took a put credit spread. That one expired worthless. We doubled down on it at some point in the New York session lunch. And then we also went long on MES as well, trying to get a little bit of that recovery. So overall, not a bad day, 2 for 3. I'm pretty happy about that, especially from yesterday. Even though yesterday, profit-wise, we did a lot better. Yesterday just didn't feel good about starting the day green and then giving it all back. It's, as a trader, we've got to manage your emotions too, right? And I talk about that a lot. Manage your emotions. Make sure that you're doing what you set out to do. I did not do what I set out to do yesterday. Good question here from Josh. So, is there a tool to measure the rate of delta expansion contraction besides eyeballing it? At the moment, no. But that will likely be on Monster Boston's list. Make it happen. Oh, I didn't tag him. What in the world? There you go. Yeah, really good idea, Josh. 100%. I really like that idea. We can do like a percentage thing, maybe.
Yeah, I think it would be a really neat gauge to just have that sort of showing up for the instrument that you're on. If you could see that it's tilted to the side of contraction, it might help you develop a bias.
Anything that helps us in the market, right? We always say the same thing. Our job in the market is to find clues to determine what's the most likely scenario for price, and then we decide whether we want to take that trade or not. All right, and then how. The last one is how. The last piece of it. How do you want to take the advantage of the trade? But yeah, that's one of the things I want to talk about today. What else did I want to talk about today? Bullish bias, right? So I don't think, based on what we're seeing here, okay, I know there's a lot of calls. This was a little bit concerning to me. So a lot of calls sold today. But if we were to tally up the calls and the puts from the weeks prior, calls still outweigh puts. And I think we're not going to see these calls completely sell off until after OPEX. That's my opinion. Okay, because we're still above this bull level right here. Right, for those of you guys, just mark this level, 59.18. That's the level that I have for all those calls that have came in from last week. We are above them now, right? So the calls started coming in from here all the way. They stopped here, right? Calls didn't come in anymore. And now calls are being sold off here. So this kind of tells me that this might be a spot that they're getting rid of their contracts to get back in, or actually just risk off. But they haven't sold them all, so that tells me that they're still in. Okay, so who understands what I'm saying? Who understands what I'm saying? We're tallying up the calls and the puts. And there's still more calls right now. That's it. And there's still 2 more days of trading. How do I know? Good question. So let me show you. You're about to be mind blasted, sir. K-Dog, you ready? Are you ready to have your mind blasted? So this is Jan 7th, okay? It's just one of the days that had the most. Look what happens. Where'd all the money go? Where is all the premium going? You see what I did there? Right? Run that back? Oh, I'm going to run it back. I'm going to clap something. Hold on. Alright, this is Jan 7. You ready? Mind blasting happens in 10 seconds. Alright, this is Jan 7. You guys see $14 billion in calls, right? Overall have been purchased. Okay, now when we're investigating the chain, we're all interested in OPEX, right? So here, I'm going to change the expiry now to the 17th. Kablamo. More than half of it went towards January 17th in calls. That's a hell of a lot of calls. Right, so that's why even last week when I was talking, when we were running market prep and I was answering questions and on stream, I was saying, like, I think whatever is happening right now is a better opportunity long, right? A better value long. I really did think that. And so far, if you did buy this dip, like some of us did, right? What were some of the trades that we did here? We sold puts on Tesla like madmen, right? Right? Who remembers? We sold Tesla 300 puts February 21st. February 21st, 300, and we bought the 295, and we did a lot of them, right? I personally did 7, so that's just my transparency, and I showed you guys last time, but that's how I wanted to participate, right? I wasn't sure if we were going to dip any more, but one way we can participate is selling puts, and as it sits right now, that trade is actually already at 40%, so really good. We also doubled down on our Palantir put credit spread. So that one's looking good as well. But right now, again, we're still holding above this price. 59.18. We are above it. And all the calls have not come out yet. So we'll have to see. Obviously, don't wear a jersey coming to work, right? This is that predictionary mindset that we have. Sometimes in the market, though, we want to be more so reactionary, right? Especially if you're directional. You could be I think you'll have a better time being reactionary than predictionary on price when you're intraday trading 0DTs, futures, or shares or something like that. Part of this is actually also why I loaded up so many shares on NVDX. Nvidia today just went crazy, right? Nvidia today going haywire, right? This is NVDX. We know that if if Nvidia comes back towards 140, 145, NVDX is probably going to revisit the 15 to 17 area again, right? And so I'm happy to hold it via shares. I don't want to hold long calls, not yet, right? I don't think that's a smart way to participate at the moment, but yeah, that's what we got. That is what we got. Short spiel. Josh, any input? Because I know you love this data too.
Not really. Not at this time, man. I'm sorry.
Oh, it's all good. It's all good. Hopefully for you, K-Dog, you understood what I was saying. Give me a thumbs up if you did. If you don't, that's too bad. No, we'll try, I'm always going to try to make sure that I help you guys as best as I can. Rekius, any thoughts as well?
Not particularly. I've seen those millions and millions of calls coming throughout the week, so keep an eye on it too.
Yeah, definitely keep an eye on it. I think there's something. There's definitely something here, and I still think a bull market is here. I know the market's talking about like, oh, interest rates might not do this, and bonds are doing this. Focus on one true metric. There's one true metric that I always follow, and that's actually who's short and who's long. Right? And at this moment, it looks like everyone's still willing to buy calls. So why is that? Right? We're retail traders. We don't pivot the market. Right? So if everyone's still buying calls, man, I'm going to be interested too. That's what I'm going to say. Yeah, we pretty much had no news until inauguration. Yeah, basically. You're right, sorry. There's nothing going on until Trump takes office on the 20th. So like Friday, we have OPEX, but that's it. So I think one of the best ways that you can participate via, probabilistically, it's honestly sell credit. I think that's the main thing. That's been my entire week. Monday, Tuesday, like today even, losing on the directionals and then just recovering via selling credit. I think that's going to be the only way for us to navigate better. It's been selling puts all week. There you go. Sorry, I like that. Any questions from the crowd? Because I did promise today that I would leave more room for questions. I've covered everything already, so I do feel bad sometimes. We run these Q&As and then I don't leave enough room for questions, and then no one gets their stuff answered, and I just leave. Khaled. Yeah, oh, good question there. Good question there. So Thunderdome, Theta Thunderdome starts around 1 p.m. EST, right? Is it? No, it's not. 2 p.m.
Yeah.
So it's around 2 p.m. You guys in your East Coast. So here's the thing with that. Here's the curve, the premium curve. Premium of theta. It goes like this. Right here is like we'll call it Theta Thunderdome, like TT. This is the open. 7:30. Right. You kind of already missed out on so much of this. It's actually better that you don't sell like that. That's what I'm thinking, right? And so when you do it this way, when you start selling like here, everything else in the chain that has no value, right? It's really hard to do that. I've tried it. right? It's actually better if you're getting closer to the end of the day. It's actually better for you to sell tomorrow, if you still believe in like a trend. Like sell 1 DTE. If you don't get any sells here, it's probably not that great. Yeah, you've missed too much juice already. It's gonna be too difficult. 100% Khaled. 100%. Here you go. I'll write it for you guys, because I know you guys. This is gonna be recorded, and so you guys will eventually learn this stuff. So, 3 sessions of the New York sesh. Okay? 3 sessions. PST time zone, because West Coast, West Coast, okay? So you can convert it to whatever crappy time zone you are in. 6:30 a.m. to 8:30 a.m. First session. Okay. However, 7:30 a.m. is the beginning of optimal buy time. Okay. 8:30 a.m. to 11 a.m. second session includes NRC lunch. 11 a.m. to close. Theta Thunderdome. Do not trade zeros here. So your optimal time to trade 0 DT is 7:30 to 11 a.m. Anything before that, you better figure something else out. You can sell, right? You can trade shares, you can trade futures, right? After 11 a.m., you can't do anything. You should actually just trade something else. Apple, can you explain how you knew it was the bottom today and yesterday? Oh, man. Yeah, Zebra, happy to share, my friend. Let me first of all sip this coffee while it's still warm. Yesterday. How do I know yesterday was the bottom? How do you guys think I knew yesterday was the bottom? That there was a bottom. Let me tell you. Let me tell you. Let's zoom back out. What was yesterday's bottom? Right here, 57.70. What was yesterday's trades? I can't even remember anymore. Oh, it was here actually. This is your session break. Orange. $5,800, right? What time was this at? 9? Lunchtime? Cover really quick. Give me 1 second here. Alright, cool. So this is what Gamma looked like yesterday. Okay. What did we do? Yeah, we sold Apple King of Bottoms. Oh my goodness. No. So yeah, we sold a hell of a lot of credit down at 57.80. Just about. That's well below this, right? So when I saw the market at the open from yesterday, even if you were gauging the gamma side, 57.90 was the interest of the market, right? When you're looking at it like this, if we do come down, where do you think price is going to stop? Likely here, right? Where all the value is. That's right. The market, here's the thing with gamma that a lot of people don't understand, is the market for the New York session is not going to go further generally than where the most valuable strike is, because we have to treat gamma as an obligation, right? There's no obligation for the market to go any further. It's not going to pay anyone. It's not going to pay anyone for them to do that. So why would they work that hard, right, to make price go even further? It's not going to, right? So that's how I knew 57.90. I know we stopped shy of it, right? We only got to 58.06. That's fine, you know, but as long as you understand that that's the target for price and we're not going to go any further, right? We talk about sell side in terms of like shooting at a target, right? When you're buy side, and I think Josh really likes this analogy too. When you're buy side, you are like aiming at a target and you're trying to hit the damn thing, right? When you're sell side, you're trying to miss on purpose, right? So if you're buy side and you're trying to make money, you'd be targeting that 57.90 if we were to come down, right? When you're sell side, you want to sell like well below, like far away from that, because you have no interest in that target being met. Right? Probabilistically, what's easier for you to do? Hit the target or miss on purpose? Right? It's easier to miss on purpose, and that's one of the ways that we talk about credit spread. Like when you do credit, you're missing on purpose, and then that's great. You're being rewarded and paid for that risk that you're incurring, right? And so I always say, rule of thumb, MVC, if you're selling credit, you don't want to sell the MVC. You actually want to sell like 10, 15, 20 points away from it, so long as you get your margin requirements. My margin requirement is I need to see at least 10% of profit from the margin that I'm putting up. So for a rough example, if I'm putting up $1,000 worth of risk, I have to at least collect $100 for that risk. If I'm not collecting $100 for that risk, it's not worth my time, right? You're better off saving that money, saving that risk for another trade, right? I've seen actually last year, I mean the year just started, but there was someone here that was advocating for selling credit and collecting like $20, $25. I was like, no, man. And then what happened? He blew up. Like, I feel bad, but that was something that we talk about. Like, if you are collecting only $20, how many rolls do you need on your spread to come out in the green? Like, more than 3, at least, right? If you collect at least 10%, there's a high likelihood that you only need to roll one time. Roll one time in order to win on your next trade. Right? K-Dog says, isn't Gamma higher at 5900? Yeah, so this is 710, right? I want to say Gamma and Delta and Vanna, all these Greeks are dynamic with price. At the moment, it was still pointing bullish, right? It didn't actually flip bearish until, I think, 8 a.m. Yeah, at 8 a.m., things started to be a little bit crazy. And then if you even go further, 8:24, yeah, you could clearly see that a lot of value has been going to the opposite direction. And now MVC is to the downside, 57.90, right? Again, we never met 57.90, but we knew to sell away from it. We sold well, like very far away from it. 57.80 was not of interest at all, right? 57.85 maybe, right? But on the downside, this is 57.80. There's no reason the market's going to go here. So Zebra, hopefully that makes sense to you. And then today, same thing happened, right? Same thing happened today when we were looking at the market. I'll show you today. $59.24. This is the open. So a couple things today, though. I'll say this, couple things today. I wanted to sell well below 5,900. So I'll show you why that is. Look how much long deltas are at 5,900. Right, this is a lot of support. It would take a lot of force for the market to give up on 5,900. Right, so basing my trade on this, I can see that, yeah, this is probably a likely scenario that we're going to be okay. Right, that we're going to be okay here to sell below. So that's why I chose 58.85. Right, this is 58.85, like all the way here. Right, and then also remembering that CPI was bullish. Right, CPI was very bullish. We gapped up. We gapped up above all the calls that came in, right? Here we go. Again, this is the green line that we have. We gapped up above it. We were moving heavily above it. So I knew there was an opportunity. I was going to wait. If we got to low of day, if we started to come back towards this price, I was willing to take on the risk. Right? I was willing to take on the risk. And that's why I sold, again, 58.85. But we sold this. Very unlikely that price is going to get here. So see where does that kind of make sense? Right? It's not an absolute, right? But based on my findings and based on my understanding of what these Greeks represent, it told me that there's value. It told me there's no value in the market going there. And that's actually one of the things I love about sell side. It's amazing. You know, this ABJ guy has traded all these different styles, man. Now it's now we're doing 360 again. trying to pick up these futures and all that too. But yeah, that's one way. Cool. So that answers your question. Any other further questions here? Feel free to ask Josh and Rekius here too. They know a hell of a lot. Harass them. Don't just harass me. I gotta figure out this virtual camera nonsense. Display capture.
It's pretty slick, actually.
Well then.
It's a great way if you want to live stream to like YouTube or something like that while you're also sharing with your Discord peeps.
Yeah, eventually that's gonna be the plan. I wanna do that, but yeah, I don't think I can. I don't know how to turn it on right now. We'll have to preview. Is it seen?
Might be a stage bug. You probably doing like the regular voice calls.
I just need to know the settings. I'll figure it out. Oh, have you ever seen NBC flip it rapidly and contract? On Gamma side, not so much. The ones that contract the most is actually Delta. So like you'll see here today again, that 5950 Delta. So here's the thing. Gamma gives us targets, but Delta is the one that also gives us a headache. Right? If Delta isn't in line with what Gamma and Vanna wants, we're probably not going to go there, right? And so this is the thing that I talk about, the trifecta. You need the three buy-side Greeks on your side in order to trade my strategy. My strategy for calls or for directional is the three Greeks. These three. I need to see them all together. I don't care if it's like a difecta. Let's say, today Gamma and Vanna weren't so happy. Gamma and Vanna were in one way and the Delta's another way. Like that, I'm not going to go ahead and decipher that scenario. I would just rather risk off. I'd rather participate in the market another way, right? When we talk about long directionals, we talk about trading options specifically, right? The reason why I put long calls and long puts at like the bottom of my priority list is because that incurs the highest risk. I know some of you guys are like balls to the walls. 0DTE, SPX, we're going to shoot 1,000%ers every day. I just don't think that's realistic, especially if you're trying to use the market to pay your bills and grow your portfolio. If you continue to do that, at some point it's going to backfire. Because that one truth, what's the one truth of options, guys? I say this so much. What is the one truth of options? Expire worthless. That's right. All out of the money options expire worthless. Right? What doesn't expire worthless? Or what expires worthless in your favor? Credit, right? When you're short options, you get paid for it. Shares, they can't go to zero. Leverage shares, I think a lot of you guys are now seeing the power in leverage shares. I know someone here in the chat now is only focusing on leverage shares. That's great. Leverage shares incurs least like a directional bias, but less risk, right? And that's great. That's what we want to do in the market. That's what we want to do. We don't want to incur that much risk. We want to protect our capital, right? And then, well, actually, I wouldn't say futures is less risk too. Futures is pretty hard. Futures is a lot more leverage. You've been out of buy side options since starting sell side. That's great, man. I love it. Yeah. All right. Well, yeah. Last 10 minutes. Like, feel free to ask your questions. I am so behind on some like Instagram and Twitter content. By the way, if you guys are on Twitter, like if you tag QuantData and about your trades and stuff, like we will retweet you. We will do it. If you tag Levi, just make sure you also send him a slippery photo. All right, that's what he asked for. It's not me asking for it, man. It's Levi. Levi's the one who wants it. You can get wrecked in leverage ETFs during long downturns, 100%. But it will never go to zero, right? Imagine the market went crazy in like the opposite direction, and you're in long calls. We've seen it before. What would be worse, you holding TSLL or be in those long calls? I don't know, man. I don't know. I mean, I do know, but yeah, it's less. Your preferred DTE dates for spreads, do they vary and why? Yeah, 100% they vary. I do follow tasty mechanics for some long-term trades. So 45, 60 days out. I love doing those ones. I do a lot, the zero DTEs here in QuantData, if you're in stream, I'll tell you right now, it doesn't pay the bills. It supplements the bills, but it's not something that I can be like, oh yeah, I need to make this today because otherwise I can't eat. I don't think I know any trader that relies heavily on zero DTEs to pay their bills. That's a little crazy. We all have some sort of long-term port that we can rely on and fall back on. So the time frames that I like, zero DTE, 7 DTE, 5s. It actually goes throughout. Like it goes from 0 to 7. So sometimes I'll like Monday's open, I'll sell the Thursday because that's probabilistically very high, right? Because of theta decay on Thursday contracts specifically. If you don't know what I'm talking about, you can. There's a research paper on it from Kem Carson that's really good. Regarding how if you sell contracts for Thursday and it's a market open on Monday, you have a potentially higher chance of coming out with 50%. Anyways, I'm not going to share that research paper. It's not my paper, but you can find it on Google. Yeah, zero DTE, too risky to size big, 100%. 100%. Unless you're really confident on the day, man. It's a different story. Yeah. So yeah, 60, 45, and then 0 to 7. Sometimes we'll do 30. It depends. A lot of times we'll sell contracts into the OPEX week. So got to remember that too. Yeah, that's it. So 7 minutes left. Not gonna leave early, but if you guys do have questions, feel free to plug them in right now. This is your time. Again, got some complaints last time. Y'all didn't get to ask questions. And you know what we do with people who complain. We mute them for like a week. No, I'm kidding. Not kidding. Oh man, but no, I'm just kidding about that. But I do feel bad. Last time we ran overtime and there was no time for questions, so I want to take this time to answer any questions that you may have. Trader Help Hotline, by the way, is still up. So if you go on my Instagram, it's still up. So you guys can feel free to ask questions. Right here, it's still here. Trader Help Hotline. Go ahead, plug them in. Completely anonymous, right? Only I will know who you are. So it is completely anonymous. It's anonymous up until that point. Right? I'll be respectful. I won't share. I won't share who you are. Unless you ask me a stupid question. Then I'm definitely letting everyone know who you are. Like that gentleman who asked me for a discount. What in the world, man? I want to subscribe, but can I get a discount, please? What? Dude, I don't even know you, man. What in the world? What in the world? We went up all day, but net just showed puts being higher than calls all day. When was this? Where? Ooh, sorry, good question. Want me to sell 5 wide instead of 10 wide today? So I think I was, if you didn't, maybe you didn't hear me, but this January, this first 2 weeks of January, I wanted to participate a little light, like a little more light. So that's why I've been doing 5. That's also why I've been trading MES and not minis. Just to get my feet wet again. You know, I wasn't here all of December basically, right? December, went to Japan. Went on vacation. I didn't really trade. I kind of was mulling over the fact that I had such destruction on yen carry trade. And I know I'm very transparent. I try my best to be transparent without showing like all the raw numbers, but I think you guys know I didn't recover last year. So last year, yen carry trade like just lost an enormous amount of money, and I never ended up recovering that amount. I only recovered like 50% of it, and so that's why this month, January, I'm trying to participate a little bit less so that I can get a firmer groove on like the market again, right? It takes some time for me to build that back. And also, not only that, I actually want you to do some math on this. Sometimes when you sell a 5 wide versus a 10 wide, you don't actually collect more, like that 10% margin, right? And that's my absolute rule. So the 10 wide, sometimes you'll sell a 10 wide and it'll offer you $60. But then if you sell a 5 wide, it offers you $50. So why would you stretch it out to 10 then? I'm just making up numbers here, but why would you do that? It doesn't make sense. You're taking on way too much risk for the premium that you're capturing. Okay? Yeah, so you could keep an eye on that. Any quick advice on compounding my portfolio? I'm down 96%. I'm sorry to hear that. Is that real? Are you trolling me? You're not trolling me, right? I hope you're not trolling me. But I'm sorry to hear that. That's a brute. If it is true, that's brutal. Take a step back. Decide like what is your purpose? What is your purpose for participating in the market, right? I actually just ran my class for mentorship. And I will repost the replays soon, but let me see what this note is. This is actually a really good note. I think a lot of you guys might be able to understand. Is it here? Oh, this one right here. So for those of you guys that were just in the mentorship like an hour ago. Oh, okay, not a troll, 100%. I'm happy to talk to you. Anytime you want to talk, like just ping me. You can even talk to the other traders here. Like Tipped is a really good guy. Josh Trades Futures is a really good guy. There's a lot of places where you can learn, but so yeah, I just went over this, and this is something I learned too. And I know Josh knows this, but like, why do most retail traders suck? Like, I don't think it's that much in regards to your edge. It is absolutely your edge, but I don't think it's all that, right? Here's my opinion, and others share the same opinion with me. Josh, let me know if you agree. But I think why most retail traders suck and lose money is they actually have no clear reason for participating in the market, right? Most people say like I want to make money, but like the truth is, don't we all? Like that's why we get jobs. That's why we work hard for our promotions. That's why we do everything outside of the market to make money, right? So why does it have to be the market to make you money, right? What's your purpose for participating, right? And then the other thing is most retail traders don't make it because they actually can't. They're not strong enough to stomach the pain of what the market can do to you, right? I've experienced like I think some of you guys know from me from my old Discord, like 2023 March FOMC, like I was sick to my stomach because I lost so much money on that single day. I vowed that I would never have that happen to me again, and then what do you know? Yen carry trade happened again. So it's almost like a once a year thing that happens to me. So yeah, just I didn't blow up. I was still green on the year, but it was just those 2 days in my career really hurt. But I can stomach it, right? Because I know in the end the market is my way of accelerating my success, and I love the market. Right? I know that if I were to pick up a job, it's not going to be enough to live here in my city of Vancouver. It's impossible to live here. And then the other reason is like, the edge part, right? The other reason why most retail traders lose is they don't actually have an edge. They might think they do, and that's going to be very hard to change that mindset. Right? How many times have Josh and I talked to people who tell us that their edge is 2 EMAs converging, and that's it. I don't know, Josh, if you get the reference. I'm talking about someone specific.
I think I do. Yes, I think I do know who you're talking about. Man. I think the thing too that people don't realize is that edge is not just, hey, this is when I enter and this is when I get out. This is my rule set for the actual trade. Your edge is actually not in that. Anybody can find something that they can use that's repeatable if they work on it and figure out the right way to do it, the right process or the right rules. Mm-hmm. The actual edge is in how you manage risk. And I know that if you go through YouTube and you listen to all these gurus and gurus and they all say risk management, it's almost ad nauseum. It's almost cliche at a certain point. But if you don't learn to understand that risk management is your edge, then you'll never succeed in the market. It is 100% a fact.
I love it. And that's why I love our community. There's so many smart people here. Josh, again, reach out to Josh if you have any questions. Like, he's a great futures trader. So I was just like, Josh trades futures. He better be great. Yeah. I actually think that the other part too is I don't know. I can't see your name because I'm recording, so I have all the names blocked. But for you here, if you're trading options, right? For you here, if you're trading options, I hope you take the time to actually understand like what it means, like what are options? Because so many people, they're just not informed. They trade options and they don't even know what theta is. They don't know. Like they buy calls and they come to me and they go, oh, I bought calls and the market's going up, but then my calls are losing value. I don't get it. Well, then why did you buy calls, right? We kind of talk about the same thing. Like, would you go and buy a car before you get your driver's license? No, right? Doesn't make sense. So why would you buy options and participate in trading options before you know what the hell you're buying, right? It doesn't make sense, right? An easier way to participate in the market if you really had to trade. Futures, I really agree with futures right now. Futures is a really low-cost way of entry for trading, low risk if you set your stops accordingly. Shares, nothing wrong with shares. I don't know why so many people talk nonsense on shares. Like, oh, why are you buying shares? People gave me some nonsense today. Why did you buy NVDX? Why don't you just buy long calls? Dude, this is a different way to navigate the market, man. NVDX holds less risk. I could be wrong. If I'm wrong on shares, here's the bad thing about shares. If I'm wrong on shares, I just have to wait, right? Leverage shares, different story. We have an upward, like up to 30 days to hold. But yeah, there's a reason why most people don't beat the SPY, right? Shares have nothing wrong with shares. Don't talk down on shares, man. But yeah, 603. Appreciate all the comments. I'm going to post some stuff on Twitter and Instagram. I'm going to post something on YouTube maybe tonight or tomorrow. Feel free to converse. Feel free to ping me if you have any questions. Again, get involved. I guarantee you're not going to find a community like ours where we're just so willing to help. We're so willing to help each other because we truly believe karma comes full circle. And it really does. And the streams are free. Everything's free here. And that's just the way. That's just the way we do it. Any final thoughts from you guys, Rekius and Josh?
No, you covered mostly everything, man.
Well, there you go, man. There you go. Josh, anything?
Another great stream, dude.
Cool.
Appreciate it.
Always happy to be here. We'll be here tomorrow. Let's see what this job stuff gives us. Again, this one. This is what we're looking at tomorrow. Where is it? Initial jobless claims. And then manufacturing index, as pointed out by Tipped. Retail sales as well. I feel like this one carries more weight, but I mean, it all happens in like the same minute, so it doesn't matter anyways. Those of you guys trading futures, I'll see you guys tonight.
Yeah, I was going to say, if you're a futures trader, you might get up early. There might be some good action as participants position themselves for the news releases. So sometimes you can get a good move before the market even opens.
Yeah, 100%. I definitely will. I did really well on CPI. I didn't even mention it, but I longed the Dow overnight.
Nice.
I did a MYM though, so the micro Dow. It was still a pretty good payday.
All right.
But yeah. All right, I'm gonna go eat dinner with Carmen. I'll catch you guys later.
All right. Hasta la night.
Okay, have a good night.